ICS, War Room ICS number 18, trainee Alan Vergara. Let's go to the screen. Where's the screen for this? Share what we have, 58. Sharing.
Hola.
Hola, Alan, how are you?
I'm okay.
You're okay, that's good.
Yes.
Let's go back to work, okay?
Yes, sir.
Okay, so we have the S&P. This is our session number 18, if not mistaken. And tomorrow we have a back-to-back. Is that okay with you?
Yes, that's fine.
Okay, perfect.
Back.
So we're looking at today one session, and we finalized our trend Fibonacci target reached on the S&P 500, 3,220.26. So that's it. Now, today what we're going to do, we're going to look at the different stocks that you sent on your article, from Hershey to the other options, 10 biggest price target changes on Friday.
Mm-hmm.
And those will be call options. So we're going to work on a few of them. And CP Trader 95.7. And then we are, of course, I want to take a look at Netflix, so we know what we're doing there and what may take place. Is that okay?
Yes.
Perfect. Now, as I said, we reached our target. This is all you have on your screen, the S&P 500. As you mentioned, there's some capacity that can still push higher. We cannot discount that. The fact that we reached the target doesn't mean anything. Doesn't mean that it cannot just keep going up or short pull back to the 3,200 level and then continue again, and then reach a level in the middle range. I no longer have any targets. I will be just preparing myself for the first week of January to go short via puts, and that's my goal. So right now, call options have no interest for me. I will need at least to see this thing go all the way back. Probably, at least I would like to see something severe around 3,020. That would be ideal, my ideal scenario. Also, one thing I want to point out during this intense coaching session, I want you to pay attention. And
that's a huge drop.
No, 200 points. It's nothing. 180, 200 points. That's just what it needs to take place in order for us to see a huge opportunity for the call options to rotate higher. We'll be positioned we will be positioned on the downside, where in a day you can easily expect a 40-60 point drop. At this level, 200 points shouldn't be a surprise to you. That's something that if it takes place, it won't take place in a day. It can take place in a full 2-week span. Okay, but you have to be ready to understand when it gets down there, where you have to look. You see, that's where you have to see, okay, if the S&P is been trending lower for a month, over 3 weeks, okay, what options, what are the options that have my interest? Okay, and of course, remember, as it trends lower, you want to take a look at where are the calls, and that's when you start tracking calls and how they keep behaving by the end of the rotation. So that's your goal at that point in time. Like right now, what is our goal? We want to start targeting what are exactly doing the puts, because those are the ones that are losing value, and when it reverses, those are the ones that are going to gain the most. Okay, of course. We want to have puts, a mix, puts that are in the short term and also puts that are a little bit in the long term, 3 months. If they have a good price for us, that will be the challenge, the price that we have to pay for those. One thing I wanted to point, and I will do this right away. I want us also to pay attention what is the US dollar versus the Japanese yen doing as a measure of when to expect this to start rotating lower. Do you see that on your screen right now?
Yes.
Okay,
Sir.
USDJPY. Why are we paying attention to this? Is a great question, and this is part of your training. For you to be proficient, understanding where you can expect the S&P 500 and equity indexes to trade lower, you always have to pay attention to the indexes. You have to pay attention to the Nikkei 225, the Japanese stock exchange, the Nikkei 225, and I focus on the S&P 500. Okay, those are the two points of reference to understand when exactly you can expect these equity indices to trade lower. And there's a direct relation with the currency pair US dollar versus Japanese yen. Why? As I mentioned in other sessions, this currency pair tracks investor sentiment. So if the investors want to take risk, they turn into the stock market, the pair will go up. If investors are afraid, if they want to remove risk from the table, we call it risk off. And then investors, they sell dollars and they buy the Japanese yen. Therefore, this pair goes down. When it goes down, this can be this is your number one leading indicator for you to be positioned. So right now, what are we reading? What is the reading that we take from this currency pair? It's sideways.
Consolidating.
Consolidated. Now, what we need to figure is, where do we expect this breakout to take place?
Go? Yeah, where
exactly.
Is it, which direction it's going to take?
Absolutely. So what we're going to do is we're going to go to the big time frame because we want to make money. We want to know exactly where we are. And we're going to throw our friend, the moving average, 50 exponential. High, low, close, divided by 3. I'm going to add a blue. And we can see two things. Before throwing it one more time, I want to see the candlestick, the type of formation that we have right now. You see that? It's pushing a lot on tail, pushing higher.
Buyers are fighting.
Exactly. There's a strong presence of buyers, and there's nothing to be surprised as the S&P is again probably in the third consecutive week making a new all-time high. So this price behavior shouldn't be a surprise for you or for me or anyone in the war room, especially anyone in the war room, because we've been talking about this for weeks. You and me, we do it directly in a coaching session, but they also have been receiving this information. And by the way, if you go to Telegram on the war room, okay, and you scroll to the pin, there's a post that is pinned to the members area. I have the target for the S&P since June of this year.
Yes.
This is not new. I mean, I have been talking about this. Now, of course, we haven't maximized as we should. But next year, guess what we're going to start doing as well? We're going to start trading the S&P 500 calls and puts. It makes perfect sense.
Yes, the SPY.
The SPY, SPY. I mean, it makes perfect sense because look at the information we had.
Yes.
and think about anyone that comes to the war room, they come from equities. But with this information, with the actionable information that you'll be receiving, you can easily trade futures contracts.
Yes, it's so predictable.
It wasn't absolutely nothing difficult. It's just something that we have to do.
And the spread is 1 cent.
There you go. And you know why? Why do you think, tell me, Alan, why do you think the spread is only 1 cent?
Because there's a lot of volume and open interest.
It's highly liquid. There you go.
Yes.
It's highly liquid. So getting in, getting out, it's piece of cake. We just have to make sure we have track and we have an accurate entry. With price rotation, trend Fibonacci, the odds keep moving in our favor. So one of the things we'll have on the table in 2020 in the war room, SPY. Okay.
Yes,
now, with this formation, again, we're going to go back. We see that there's potential for a continuation, a bullish continuation. We're going to add our friend, the 50 exponential moving average. And now we see that there is an opportunity. Simple eye analysis. We have an opportunity to go all the way to 112.15. What that tells you is that there is absolutely more room for the S&P 500 to continue pushing higher. Of course, we know that nothing will go in a straight line. So the question is now, if this is on the table, 112.15, we know already what to expect next year, and also continuation to 114.76. What we want to figure is, where is the pullback that will give us the opportunity to participate in this one, and how we are going to profit from the pullback via puts, and then how we have to prepare ourselves for the continuation of the currency pair, which means there's a lot for us to see on the upside in 2020 of the S&P 500. Now, I'm going to move to lower time frames. More information in our disposal. 108.94 via the 50 exponential moving average is a support. It's almost, I will say, 50 pips. Okay, that means that prices can retrace easily here, and nothing should be of a surprise. This is the kind of price range, point range, that will set in motion a pullback on the S&P 500. Okay, now at this level, what I will do is this, because we have a level here, although it has been stuck moving sideways also on the weekly. You can easily see that the S&P broke to the upside. So I'm going to take from this pullback, because with my pencil, I will show you. Look at this. Up, pullback, then continuation, and slightly pullback. So we have a simple 101 technical analysis pattern. We have higher lows and higher highs. This is a bullish pattern. It's there. It's there. And see that we still are not talking about the insiders. We know that insiders have been buying. This is a fact. This is why I'm not mentioning it anymore. You know that we count on the fact that they are buying, and they have been buying companies on the last pullback, so we already positioned on those. But we want to know exactly the rotation to pinpoint when to buy those puts that we have been tracking. Of course, we have this
like
level.
Which insiders are we talking about? Like insiders of the other stocks?
Yeah, on stocks, of course.
Okay.
For example, C-level executives. Remember, we have directors. They bought Expedia. Yes. They bought Expedia in 98. We also know that
the Children's Place.
Correct. Also, we have that one. That's one to keep reviewing and to have in mind. So we are in this sideway for the last 1, 2, 3, 4, 5, 6, 7, almost month and a half, because this is the weekly. Okay. And we're about to set in motion. Either we go back to this range, okay, go back to this point, or we just simple, and probably this is what we have to expect, move here and then all the way. So this is the pullback that we're expecting. So as I said, this is the reason why we have to keep an eye on what is happening with this currency pair, because this truly indicates that there's potential for us to see higher prices and the S&P 500. One more thing I want to do before I move away from this chart is take a look at this. We have these, the 50%, 107.96, that's 108 actually. And just to keep the practice, is the range. And here we have the
from zero to 100.
Yeah, we can put it. I'm going to be conservative with my projection, taking from 50, because if I take it from 38, I'm giving it more range to go up. Do you see that? So I'm going to be conservative, move it here, and my projection then becomes 111. That means that by the time it moves up 150 points, when we get to this area, we're ready to short. We're ready to short. I'm going to save this, send it to you so you have it, because this will be your leading indicator, plus a combination of understanding where is the S&P 500 rotating, and we go in. And I
it's rotating at 111.
Exactly, because when it gets to 111, weakness will start popping up all over the S&P 500. What they call in technical analysis, fancy Bloomberg, oh, it looks exhausted. The trend looks exhausted. There's nothing like that. It's just, it's finished. It requires sellers. It will require profit taking. And all that has to be considered by us as healthy, as part of what we need in order to trade. Because if it doesn't happen, we won't make any money. So
and the added confirmation, if you look to the left, there's that resistance right there.
Absolutely, historical level with the in place.
Yes, sir.
Okay, so send this to you. Okay, send it to your Telegram. Okay, so we have that. Let me just go back for a second. One of the things I want to take a look quickly, and we probably leave the list. Take a look at the list. There are a few options, but let me make a few comments here. Let's take a look at, okay, Bank of America. They are good because you also want to sort of bulletproof who is actually making the upgrade. And we can always use FinVZ, for double checking. Citigroup, not so good, really. And one thing to point, look at these, okay, Hershey from 155 to 160, 165. We're talking about almost a 10% upside potential. So buy now, it's not a lot. It won't do that much good for the calls. So one thing I want to do also, I want to open and want to open this. I want to have a folder with your name and use
my name.
Yeah, of course. Yeah, of course. A folder where we discuss everything.
Oh, okay.
Yeah. Okay. There we go. Perfect. Okay. So let's take a look at one put, for example. Okay. We're looking at Netflix. Okay. Our short-term put is the January 17, 2020. Reasons, as usual, for the purposes of our your education or your training, is open interest 10,800. Spread 121 by 124. That's 3 cents. Rotation 182 to $90, or $90 to 182. Okay, huge. Then we have a volume, decent volume for today, 807. Count that next week is Christmas. Okay, and this is something that I can see when if we think about the VIX, the volatility index, right now seems to be slipping away. But as soon as that thing starts spiking, this will increase, as investors will like to cover their downside on Netflix. Remember, and two comments I want to make because it's mainstream. I don't know how much you've reading recently. I think you must be reading a lot about the streaming wars, which is I share that with the war room all the time. Comments about The Irishman, the latest from Martin Scorsese. I love him. I love Martin Scorsese. Casino, 1989, one of my all-time favorite movies. And then you have Married. I can't remember the movie. It's with Scarlett Johansson and the guy from Star Wars. So they said there's a lot of articles saying how this changed the universe of Hollywood, because think about those movies. They didn't, were released on movie theaters. It was on Netflix. Okay.
Yes.
Nevertheless, okay.
That movie too, with Adam Sandler and
yeah,
and Brad Pitt's former fiance.
Yeah. So a lot is happening, but we need to understand something when it comes to the acquisition of content. And this is my thesis about why Netflix is vulnerable. It may look strong in the short term, and I will show you how, but this is what we have to focus. This 300 can easily happen. Think about that these, okay, happen between in the span of a week or two. But one single bad news, and then this stock will go down -7%. On the blink, like that. Why? We have said before, this is a growth stocks. Growth stocks, they have been like the super trade of the last 5 years. Okay? But it's coming to an end, because to keep this growth, what else can Netflix put you on Netflix so you can watch things on Netflix? What else is to be done? And right now, there's already the rumor that soon Netflix will be pushed to start selling advertisement.
Yeah.
So, but before that happens, they need to find themselves against the wall. So there's downside potential, and that's what we have to find. Now, in the short term, I'm attracted to this put, not yet, because I know that the S&P, as you mentioned as well, is still keeping up. It can keep pushing higher, a little bit more as an extension, past the probably the 3,240. Why not 3,250? There, we want to see again. We're going to keep this as we're going to keep track of this one and see exactly, because it can be an opportunity into a 2-week weakness in the S&P 500 that will give us the opportunity, as it happened the last time, to make some money out of Netflix. Okay, so I'm going to add this, add it to your, where do I have you? There you are. I have to your folder at 123. Open interest 10,794. Okay, there you go. Now, once again, that I have you here, I want to look forward into options that have more time. Okay, and see how. Look at that, 1% today. New high again, new high, new weekly high. Let me look.
Yeah.
Can we find something in February?
The more it goes up, the sooner that we're closing into the rotation.
Yes, let me see. For example, this put the February. I'm gonna make a change on the nomenclature, and let me take a look at the March 20. Okay, look at this. In March, there's not a lot of action. Not at all a lot of action. I can see that. So I'm just gonna take that out. And here I'm looking at this one. There's good size of it's above the 1,000 mark for us. The spread 825, only 25 cents, 825 by 850.
The VIX is.
So let me change this to 300. See where is that one trading right now? Huh. Look at this one. Again, I'm gonna keep an eye on this one. The Ferry, I'm gonna send it to you via Telegram.
That's a 20-cent spread.
For now.
Yeah.
I'm gonna show you why. Let me put this on.
Because the closer the closer it is, the thinner the spread.
And some people, yes, and there's a lot of trading happening in the short term. We just have to improve our timing as well in the short term.
Yeah.
Sort of play more with setting pending orders at 100% right away. So if the market opens and there are those spikes, we get out without even noticing. Something that we also want to do. Start doing. Okay, I'm gonna put this down for $7. Okay, now let's go to the chart. Let me show you one chart that I have for you in Netflix, so we are prepared. Dollar index. Okay, let's take a look at the. You see this? Okay. Now, the way I had it for you, let me show you how it got here. Like this, correct? There's resistance evidence at 61.8%. You can see it, okay? 334, we're trading already past this. So what to expect now? What is what we have to expect? Now, we can easily see that this is our range, okay? And if I take it from this point, this is where I expect Netflix to be at some point. This will be about a 40% drop for Netflix. It will happen? Yes. When? Well, it will take a couple of weeks. For example, if you see this range, look at this, $153. It took about 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, almost a year to get there. So don't be surprised. And here, look at this pattern. See the pattern. Take my pencil. Here, you see the pullback? Then continuation, breaks that low, and then the continuation. And then we have then the recovery. Now, of course, it's doing it again. Look at that. Finds the resistance, double top, prices go down, and here. what is going to take place here? Of course, price will go up a little bit, and then that's when the put will be attractive. So take a look at this. I'm going to remove it. And now I'm going to show you where Netflix is going to end in the next couple of weeks, and that will be it. After that, it's game on.
That would be the enter.
Exactly.
The entry.
Look at this.
Yeah.
Yes. Look at this. Now also, in the short term, look at what the stock is doing. It did this, recover, and then pull back. And boom, with the base of the Christmas rally. So
yeah,
how we determine when this is going to end? Trend Fibonacci. We take trend Fibonacci. Look at where it stopped. 38.2%.
That's so accurate.
in our face.
Yes, in our face.
It did in our face, and we know because we track those calls. Some people made some money, and then we take this from this area, and here we go. Here is the projection that we have to pay attention. 357.
That's our entry signal.
As a massive entry signal for a very strong correction. This is why we have to look into the puts on February and more March. This is why you have to keep an eye on those. Why? Because my expectation is the following, as it is. For purposes of preparing ourselves, is 1. It already hit a level at the 61.8% Fibonacci based on the trend, okay? But what it's doing now on the weekly is that it's activating the trend Fibonacci that will take Netflix to $357. To do what? To close a previous gap that it has. Where's that gap? Let me find it because I know. There you go. Do you see that?
Yeah.
And that gap, that's what the price is doing.
That's the missed pivots to hit the missed pivots.
That's exactly. And there, what do we have as well? If you consider this, look at this horizontal resistance. But what it does is that once it fills the gap that it can easily do between 357 to 360, it's done. It's coming to face a massive challenge. Because again, we look at the fundamental aspect of understanding these rotations. It's pushing high, but it doesn't have any more relevant news. So tell me, what new movie are we going to have on Netflix? What new movie are we going to have on Netflix in 2020? Black Widow? I don't know.
Yeah.
The point is, what more content can be created for you to get a Netflix subscription?
Plus they're getting a lot of competition, like the Roku, the Disney,
Disney, massive. Just in the first, I wasn't in that, like in the first weeks, Disney had like 10 plus millions of subscribers. Yeah. It was amazing. Absolutely. So understanding this, what do we have to consider? This we have to consider simple that the signs are everywhere. This is it. So we go back and we go to the weekly. So we have our target, but that doesn't mean the following. It doesn't mean that at this point we're going to have a retracement. And if you go back to your ICS practices on trend Fibonacci, remember, it may trade lower to the 23.6% Fibonacci without changing anything. So what I want to express is this. This price can go to 300. Remember what you told me about on Telegram, that you told me by that time we will be already in the money.
Yes.
We will be already in the money. This can easily, without hesitation, trade below 300 to 99 and reverse and continue.
Yes.
So that's why the short-term put that we've been studying on January 17 is of interest for us. Because we're not marrying Netflix on the downside. We're just taking advantage of something that it has to do in order to get to this level again. It already look at this candle. Look at this candle. Look at the price action. And of course, another thing that is there on the mind of everyone on the headlines is the impeachment. It wasn't that bad. The presidential impeachment.
Oh yeah.
So everyone, I mean, it's on a few headlines. Statistically speaking, impeachment is good for the stock market. because it never takes place. It never happens at the end of the day. Well, a few exceptions, but the idea is that that opportunity, something in the first 2 weeks in January, will trigger a sell-off. What can that be? Well, profit taking, more news from Trump, more drama from Brexit, another
China.
drama, another continuation of the saga with China, because there's no date for the continuation of talks. So we keep going on the same show.
The Hong Kong situation.
The Hong Kong situation, that Trump signed a bill to support that he shouldn't, and so and so and so. Because remember, it's a joke. It's like a circus. Every year there are new clowns. And by the way, that's what we want. Because without clowns, there's no volatility, and there's no volatility.
There's no movement. Yeah.
There's no movement. Basically, we cannot make money. So we got to be grateful for those jokers, for those clowns. So whatever is going to take place, it will open us doors. But right there, as we know this, remember, we'll know that it can go to the 23.6% without any surprises, and that will give us the opportunity to make money on the puts. Pretty simple. I want to go and now review a few, not a few, because I'm going to let the Singa article for tomorrow. I'm going to just quickly scan a few positions to take a look. You see, for example, this is the chart on Bank of America. Do you see it? No, this is JP Morgan. This is JP Morgan, yes. Look at JP Morgan, okay? Just trend Fibonacci. Reversal at the 61.8%. Range completed. You see, there's an extension about $6.
Why did you put it at 61 percent?
I can put it from this area as well, but I'm look to be conservative. You have here,
so just so to be conservative or aggressive, that's when you decide to put it whichever.
Yes, and and also keep in mind that you have 2 points here. You have 0.1 and 0.2. I'm choosing to go conservative with 0.2, but you see here you have the pullback, right? But what happened, what took place in this area is that there's no trend Fibonacci activation. It continued again and it stopped finally at the 61.8%, and then it did this. So I'm looking to be conservative, projecting from the 61.8 rather than taking the first option that I had. Make sense?
Makes sense.
Yes, just looking to be conservative. But of course, you do it from this area. Look what you get. We just, you see this? We're about to finish.
Yes.
And this little extra is again for something that can lead us to look for puts on JP Morgan. And that you can do. You can look for puts on JP Morgan, okay? It's 137, 140, 10% variation. That will take us
$14.
$125. 125 to 115. That's the range for puts. Okay.
Okay. 125 to 115.
Yes, that's your strike price range. And let me see what else is on the table to take a quick look. Look at what Nike is doing based on price rotation. You see, we have the full extension. We have, this is the bearish, neutral sideways rotation we previously had. This is the bullish rotation to the upside, of course, and we're not too far from the ceiling at $102. That means that we can be looking at net Nike puts around $95. Strike 95.
Okay.
That will be actually, that will be not a bad thing. It would be a healthy pullback. That would be 5% pullback estimated. Yeah. Because a 10% will bring it, which is not out of question, can do this and go all the way to 90. And that will be 10%.
Okay.
Pullback. So initially we look to what is available on the 95 put strike for Nike.
Okay.
Let's see what else we have on the table. We still have 5 more minutes.
You said 5%.
5%, yeah, because it's trading
We'll
90.
go within 5%.
Yeah, we're gonna take a variation of 5% only. It will put us at 95 for Nike.
Okay.
Cisco.
Why 5%, not 10%?
Because the strike that makes we can do 10 and 5. That's fine. You can do 95 strike, or you can do $90 strike on Nike.
Okay. Okay.
And then Cisco's still looking bullish, but don't be surprised if we can get a drop of 10%. That it will be ideally what we want, because it will take us to 61.8% Fibonacci.
Mm-hmm.
And their calls are going to be more attractive. So I'm just going to quickly open. Let me go back to our screen on old Nasdaq. I'm sharing it with you now. Let me go back to what we have. And I know we had Cisco. We had a Cisco call. Let's see what we have. Look at this. This is the March 20, 2020, 50 call. That will require a little bit of price action. Price rotation, $6 by 30 cents. Spread 105. Spread. Yeah, to 107. Open interest 26,855, and the volume
is good too.
1,309. Excellent. Yep. Now,
very liquid.
Let me look at something that I had here. Note in my notes. We actually started looking at this one when it was 48 cents, and it's now trading at $1. So actually, the high was 129. So this one made already.
Might be too late.
No. We still have time. We still have time because it made 100% because of this SP 500 last rotation to the upside.
Oh, but it's gonna rotate again.
It's gonna rotate again. Why? Because here's the answer. We have time.
Yes. Yes.
And yes, now you see, and the notes, they don't allow me to lie. Look at the notes. Yeah, this is very important. We need to be accountable to each other. Look at this. Yes. Cisco. Okay, you see the notes? Yeah. 48 cents. And look at this. 30 cents. That was the low. So 18 cents from the low. That's all it was. And now it's trading 105. That's 100%.
Yes, sir.
That's 100% right there. So I'm going to add this one to the folder. And I'm going to do something also. It's 105. Open interest 26.85.5, and today is deck 20. I'm pretty sure this actually, it was a week ago. Yeah, it was a week ago on probably, yeah, it was a week ago. So
it's more than 100% already.
Yes, you see, do you see all the notes?
Yes.
Okay, so this is our best practices as far as doing our research before we go into allocating capital. Okay.
Yes.
Perfect. So we have a minute and 18. So this will be it for this ICS War Room ICS number 18. I think we have covered in a way practical views on Netflix, price rotation, trend Fibonacci, and a few things for you to be following, doing some homework into preparing ourselves into 2020. Okay, and the expectation of a bearish rotation on an S&P 500. Okay.
Okay.
So tomorrow we're coming back. We're gonna go over ICS number 19 and 20. Back-to-back sessions tomorrow. Thank you, Alan, and I'll talk to you soon.
Thank you, sir.
Ciao, ciao.
Ciao, ciao.